Although I wanted to update my price target for Zoom, given the fact that they released their fourth quarter earnings statements. You can see my previous videos on Zoom price targets by following these links here. Importantly, quarterly sales improved by 369% year over year from fourth quarter 2019 to fourth quarter 2020. This is not surprising. We are in the midst of a pandemic. Zoom is the poster child for the type of company that's going to do very well during a pandemic. Here are some more details. Revenue comes in at 882 versus consensus of 811 versus 188 a year ago. Earnings at 122 per share versus consensus of 79 cents versus 15 cents a year ago. The number of companies that utilize Zoom that have more than 10 employees has gone up by 470%. Yes, this is an unprecedented year, but yet again, this is what we would expect from Zoom given the pandemic. Here, look at the chart. You can see some estimates going forward. I think these are way out of line. I don't see where this revenue is coming from. I actually see Zoom, revenues and earnings kind of peaking around now, sometime in 2021, as we get out of this pandemic. We can actually see that despite them beating all consensus, the share price is actually down over the trading days after the earnings announcement. I wanted to do my typical comparison here. I'm actually using Verizon. I know it seems crazy, but they bought BlueJeans, a competitor of Zoom. They paid less than $500 million for it versus Zoom's crazy market capitalization. So I want to compare these in this kind of crazy way to see if it makes sense what Zoom is priced at now. So what is Zoom priced at? Well, we can see in terms of its market capitalization, it's roughly 43% of Zoom. The question is, do the financial statements reflect that kind of valuation at $98 billion? Again, compare that to $500 million for BlueJeans. Well, if we look at revenue, we can say, no, it doesn't really make sense here at all. Zoom only has 2% of the revenues of Verizon. That gives it kind of a market cap comparison of 4.7 billion versus the 98 billion. That would translate into a share price of 1641 versus the current share price of 337.43, which seems crazy. We could also look at earnings here. We see kind of the same thing. Zoom only has 4% of the earnings of Verizon. That would give it a market cap slightly higher at 8.74 billion, again, versus 98 billion. That would give it a share price of 29.95, again, versus its really high price of 337.43. Now, of course, one thing I'm not considering here is growth. So what would it take to get it there, to make it justify having that 43% market cap valuation versus Verizon? Well, that would take revenue growth of over 2,000%. That would take earnings growth of over 1,100%. This doesn't make any sense. And let's not forget, Verizon bought BlueJeans for a reason. Verizon is going to go to customers and they're going to switch them from Zoom to BlueJeans. It's going to be part of the package. I really see Verizon making inroads on the Zoom market. Again, I think Zoom is going to peak in terms of revenues and earnings sometime this year. This makes no sense to me. I would say this is still monumentally overvalued. Do the analysis on your own. That's my 2 cents. Thanks so much for listening. I'm Brian Kozlowski.